Good morning, everybody. It is Friday, November 13th, and I am Jenna Minyard. I am the Chief Engagement Officer for the Montgomery Area Chamber of Commerce. We're just super excited that you decided to join us today for our last Financial Friday session. Today, it's going to be taxes and investments. Thank you so much, ASE Credit Union. We obviously could not do the series without you, so thank you so much for your partnership. As most of you know, this series is in conjunction with our Work Together Business Studio, and that program was actually initiated to help small businesses in the community and entrepreneurs and creatives thrive. We really want to be the resource and want to be the people that connect those entities to the resources and the people that they need to grow their business. So we're just excited to continue that partnership with ASE and excited about the program today. To get started today, I want to go ahead and intro Austin Barranco. He is a financial advisor. He has been a licensed financial advisor since 2015 and has worked in every time zone in the continental United States. As an advisor, he serves all 9 ASE Credit Union branches and their members. Currently, his assets under management are more than $171 million, and he's the primary trader for McDonald & Hagen Wealth Management. As one of the 6 members of the investment committee, he also influences investment strategies for the firm and its institutional clients. So Austin, thank you so much for joining us today.
Good morning, and thank you for the introduction, Jenna. Today's topic is going to be taxes and investments. So we're going to start with organizational structure. We're going to move into the differences between a W-9 versus a 1099. We're going to talk about taxes, payroll, federal, and state. Then we're going to move on to total gross income versus taxable income. We're going to talk about the benefits of having a CPA. And then finally, we're going to close it down with smart investments. So moving into organizational structure, let's first discuss what a C Corp or a C Corporation is. So a C Corporation is essentially how most of your Fortune 500 companies in the U.S. are structured. It's a corporation that is taxed separately from its owners. So there will be no pass-through taxes to the individual owners of the company. The company will file its own tax return, as opposed to pass-through entities, which you guys may already be familiar with. These are going to be your S Corps, your LLCs, your partnerships, and your sole proprietorships. So what we mean when we say a pass-through entity is that there is less liability for the business owner. So if I could give an example of the difference between the two, let's say that you are a business owner that owns a window cleaning company and you file as a C Corp. At the end of the year, your company will file a tax return, not you as an individual. If you are structured as an S Corp, an LLC, or a partnership, then you will file an individual tax return for yourself at the end of the year. And so, the first logical question to ask is, well, why would one person want to structure their business one way as opposed to the other? And the answer comes down to liability. So S Corps, LLCs, and partnerships have less liability. So if we go back to the window cleaning example, and let's say that you own the company and you have 5 employees that are cleaning windows, and one day one of your employees falls and breaks an arm and decides he's going to sue the company. Well, if he sues the company and you are an S Corp, LLC, or a partnership, then you as the owner are protected. You have less liability. They can sue the company, but not you as an individual. If the company has to file bankruptcy, it will not be reflected on your personal income, and you will not be as liable there. So that's one reason that a lot of people consider using S Corps, LLCs, or partnerships as opposed to C Corps. If you get sued as a C Corp, the company is fully responsible. And it's the same case with the others, but not the individual. So finally, we have what's called a Schedule C, which is part of a personal tax return or a 1040. So if you are part of the second group, S Corps, LLCs, or partnerships, you're going to file one of these Schedule Cs or 1040s. So moving away from organizational structure and on to the difference between a W-9 and a 1099. With a W-9, a contractor is going to fill this form out for the business as they are performing work for a business. So let's say that In the case of the window cleaner, again, if I'm going to, as my business is window cleaner, engage a big building to clean, the windows of their building, I'm going to fill out a W-9 and give it to the building owner. Conversely, at the end, when I'm done doing my business at the end of the year, he's going to send me back a 1099. That's also going to be reported to the IRS. So a W-9 doesn't report anything, a dollar amount that's exchanged between the two, but a 1099 does. A W-9 simply says I'm engaging this, gentleman in his building in work, and he's going to pay me on the back end. Once payment has been received, a 1099 is generated to both the IRS, and a 1099 is generated to the business owner that performed the services. This is how your taxes are calculated on these two. So next we'll move into gross income versus taxable income. It seems self-explanatory, but we'll review it here. Gross income is all the income you receive into your business, whereas taxable income is the amount that you're actually taxed on. So it's net income after deductions and expenses. So once again, I'll go back to the window cleaner as an example here to just keep reiterating. If you're a business owner and you've got 5 employees that are cleaning these windows, your gross income, let's say you get paid $50,000 to clean these windows, great, that's your gross income. But let's say that you have to pay, each of your window cleaners a certain amount of money. Let's call it, $5,000 each. Well, that's $25,000 in expenses that you've paid for your employees. So your taxable income in that example would only be $25,000, right? Because the other $25,000 was used to pay your employees. It's not just employee pay that comes out of taxable income. It's also rent, utilities, insurance, etc. So anything that's related to your business that you spend money on can be netted out of taxable income. So what we frequently encourage people to do is keep good records. Everyone's going to know what your gross income is going to be because it's reported to the IRS, but not everyone is going to know what your expenses are unless you keep good records. So you need to keep good records of your rent, your utilities, your insurance, how much you pay your employees, even things as simple as the cost for dry cleaning of uniforms. If you're a nurse and you have to wear a uniform to work every day and you have to pay to get it dry cleaned, that's an example of something that you can record to net out taxes at the end of the year. So you won't be taxing your gross income, but the net. So here I want to highlight the differences between, payroll and federal and state taxes. So a lot of people aren't aware of this, but FICA and Medicare tax comes out to about 15.3%. And in an S corporation, an LLC, or a partnership, or even a C corporation, 50% of FICA and Medicare is paid by the employee and 50% is paid by the employer. If you're in a sole proprietorship and you own the business yourself and operate it yourself and pay yourself, you're actually responsible for both. So you're paying that full 15.3% tax to FICA and Medicare right off the top, as opposed to getting some of it subsidized by your employer. There are strict penalties for not paying these taxes on time. So I cannot reiterate enough. If you are starting a new business, or you've recently started a new business, or you've been in business for a while but are looking for a little bit more leadership, please go out and look for a professional. A CPA is going to have no problem figuring out exactly how these taxes and the payroll is going to work. And this is where a lot of small businesses get in trouble. If you do not know exactly how to file your taxes properly, particularly with FICA and Medicare, the penalties are steep. So don't just wade into that water without experience or a CPA to back you up. And then finally, federal and state taxes. You're paid on net earnings of the business. So once again, be sure to deduct all of your expenses. Another example of when a CPA would come in handy. I can't tell you how many people don't know what expenses can be deducted, including myself. I don't always know what expenses can be deducted. So I hire a CPA to do my taxes for me. Even though I'm in this industry, CPAs are going to be a lot more up to date on their industry and, maximize your deductions and minimize the taxes that you have to pay. So moving to slide 5, just going to highlight one more time CPAs. It's always best to have a true professional on your team. Certified public accountants pass rigorous tests. It's a multi-layer test, and there's ongoing continuing education. And they're also going to be able to help keep your business in compliance from both a federal and state perspective. So, unless you are a CPA or you studied some type of accounting in college and are just a whiz at it, you pretty much need a CPA on your side if you're going to be a business owner. We highly recommend it. And then finally, the favorite part, and where I'm going to spend the majority of my time talking, is about smart investments. So this is what we do as a firm here, and how we're able to help and engage ASE Credit Union's members here. The first and smartest thing I can tell you about your investments is diversify them. You don't want all of your eggs in one basket. If one of your investments fails and that's the only investment you have, good luck. So I encourage you to spread it out. Three basic areas of investment are, your checking and savings account. That's one. You always need to have money you can go to and spend. Two, I would encourage you to have some type of retirement account, whether it's a 401k or a 403b or a Roth IRA account, some type of account where you're not paying taxes on the money going in, or you have some type of tax advantage on the money coming out, like in the example of a Roth account. These are going to be great for retirement savings. And then finally, we have non-qualified investment options like brokerage accounts or just a fun stock account that you want to play around with. These are all different ways that you can diversify, but don't put all of your money in one account. Spread everything out. We've got multiple investment options for businesses as well. Businesses are going to be able to provide incentive packages to bring in the best talent to their different industries. These can be 401ks, simplified employee pension plans, or like we discussed earlier, traditional IRAs or Roth IRAs. If you're trying to bring in some of the best talent around and you offer them some of these incentives where they can stock away more money without paying as many taxes on an annual basis, it will encourage more growth in your company. People come to your company because you're providing these great benefits. If you've got any questions about how to get these started for your company, this is something that ASE Credit Union along with us can provide to you. So feel free to reach out to us and ask us any questions about these. With regards to investment, we have a wide variety of investment options, not just the accounts we've talked about, but the actual investments that are held within the accounts. So an example of some of these that we use day in and day out would be exchange traded funds or ETFs. We've got mutual funds, we've got stocks, bonds. The credit union has a nice variety of CDs or certificates of deposit. Even annuities, both variable and fixed, are options here. So we're not limited in our investment options that we have here. And so if you've got any questions about investments you're unfamiliar with or would like a second opinion on, we're happy to take a look at those for you. So when it comes to smart investments, if you're not confident yourself, please feel free to reach out to us, ASE Credit Union, and we're happy to review your current portfolio and see if there's any downside risk in your portfolio that we could hedge against, or see if there's any other areas of opportunity for growth that you may be missing. We're happy to take a look at that for you. So don't hesitate to give us a call.
Austin, thank you so much for that insightful presentation and information about taxes and investments. We really appreciate you being with us today. As you can see, we have some contact information on the screen. If you have any questions about ASE directly, you can reach out to Tracy Kelly. If you have any information or any questions or comments about the taxes and investment session today, you can reach out to Austin Baranco. His information is there. And then we also have Lisa Free, who is also a CPA, and her information is located there as well. Again, just want to thank each of you for joining us today. Thank you for being a part of this series and this session and event today. And then obviously, thank you, ASE Credit Union, for all that you do for us and for this partnership. We obviously could not continue this programming without you. So thank you so much for your partnership. And I hope each of you have a great day.